Hey, this is Matt from InvestiQuant. Today is Monday, December 7th, 2020. And so far today, we have seen a pretty quiet action the majority of the session. We're starting to see a little bit of selling taking place right now. And we've actually got some different patterns taking place in the different markets. But what I want to do this afternoon is take a look at this pattern that's taken place in the S&P. The S&P is this top chart that I've got here on the top left. And what we've got forming is an inside day that is starting to trade lower going into the afternoon session. So inside day meaning the high is less than the prior day high and the low is greater than the prior day low. So all of the activity is taking place inside the range from the prior session. So that's why it's called an inside day. But that's currently forming, and we are trading below Friday's close, which is this dashed cyan line that's going across here. So we're going to take a look at that pattern and put it in the context of the strong market that we've just been in here for the past several weeks. So let me go ahead and set this up, and I'll show you how to build it here in Discover. And we're going to do it on all four instruments, even though it is not applicable to all four instruments. Currently, it's just applicable for the ES. Let me come down here and select an entry time. I'll do one towards the end of the day. We'll do 3 p.m. Eastern time. It's set up as a long that will exit at the close of regular trading hours. Next, I'm going to go into the post-open filters. This is where I can create that inside day activity. And the way I'm going to do that is I'm just going to scroll down a little bit here, and I'm going to say that the intraday low versus daily levels, I'm going to say that the intraday low is not less than the prior day low. So that means it has a higher low forming. And then I'm going to go to the intraday high versus daily levels. I'm going to say it is not greater than the prior day high. So I've got both of those not statements in there. And then lastly, I'm going to go to the closing level. And the intraday close is going to be a reference to the price at this entry time, which I've got set to 3 p.m. here for this test. And I'm going to say it is less than the prior day close. So I'm going to hit equals here for less than prior day close. And that creates the pattern where you're trading below the prior session close, the intraday high is less than the prior day high, and the intraday low is greater than the prior day low. So that's the inside day activity, along with it trading below the prior session close. Lastly, instead of doing above a 10 and above a 200 like I normally do, we closed at a 52-week high on Friday, so I'm just going to use that instead, and that'll make it a little bit more applicable to the pattern that we're seeing form today. So in the price pattern section, in the new highs section, I can find a day after a 52-week high close. It's easier to just grab it here from the active today, so I'm going to do that. Just click on day after 52-week high close, and then click view results. And here we go. So these are the results of going long at 3 p.m. Eastern time, exiting at the close, which is 4:15 p.m. Eastern time, when you have an inside day forming following a 52-week high close, and you're trading below the close from that 52-week high. So historically, this pattern has 57 samples dating back to 2003 in the S&P. It's got 42 samples for the NASDAQ, 46 for the Dow, 35 for the Russell. So the S&P is currently the only one that this is applicable for at the time of this recording, and it has the most samples out of all four. If we go ahead and look at the win rates on these, the S&P coming in at 60% of these end up closing above that 3 p.m. Eastern time price, historically speaking. The NASDAQ, it's been a little bit stronger. It's been 69% of those have closed above that 3 p.m. price historically. The Dow, 63%, and the Russell, 54%. So 3 of the 4 have been fairly strong on this pattern. The Russell is a little bit more neutral with this pattern. And a quick look at average win, average loss. Very similar in size here in the S&P. Also similar in size in the NASDAQ, in the Dow, and then the Russell is the only one that's a little bit more outsized on the average win compared to the average loss. But majority of these are fairly similar in average win to average loss as far as how big they are, and the win rates on them are leaning a little bit more on the long side. So historically, it's favored the long side a little bit more than the short side. So hopefully you found that helpful. Good luck today, and we'll see you tomorrow.